What is going on, guys? Today we're going to be taking a look at Hershey stock because the stock is up over 12, now over 13% today after Mondelez came out and said they are considering buying out or acquiring Hershey's. And this is not the first time that they have tried to do that. It looks like back in the day, roughly, what, 8 years ago, they tried before and they pretty much were Hershey's was offering too much of a $4 billion. And it looks like it's not confirmed that they are buying this company, but they're in talks to do it. And so that's what's the current situation is. But back in 2016, it says that they offered a $23 billion takeover, and Hershey's did not accept that. They said they would only agree to an offer of $125 per share or more. So it says chocolate companies as well as packaged food firms have been under pressure from rising input costs, especially cocoa prices, forcing firms to raise prices, which have in turn led to weakening demand. And the last couple of years for Hershey's here has not been horrible. I mean, this company has been around forever. I mean, I'm sure it's been, what is it, 150 years or something crazy. Okay, 1894. So it's been around for a long time. And so for a company to still be growing 5 to 7% a year is actually pretty good. That's not bad. And look how far this company goes back a long time. So that's the good thing. But the bad thing is that, and same thing with, let's look at net income real quick. Net income is pretty much the same thing. It's not bad. It's really not bad. Last year did 1.8 billion of net income. The bad part is that their projected numbers, so their numbers for this year are projected to be down from last year, and then 2025's numbers are projected to be even further down. So we're looking at $8 EPS. And anytime you have decreasing EPS or net income, year out consecutive years, that really makes the stock go down because who wants to own a stock who's going to be making less and less money every year? Revenue up 2%, so not as bad. It's the profit margins, it's the cost of things, and that's why they're going to be making less money. So if we look at Mondelez, we can see that here's all the brands they own. Okay, they own a ton of different brands, as you can see here. Belvita, Chips Ahoy, they have Halls. There's lots of big brands. Oreo, what else? Ritz, Sour Patch Kids. There's lots of stuff, right? Triscuit. So, in my opinion, I mean, I guess there's different ways to look at this for who this deal actually benefits. But I mean, as trying to take a side that's not biased, I mean, for the industry, it's not really good because I think when you have these big companies that consolidate more and more, they own more and more brands, it becomes more like a monopoly. They have more pricing power, and it just kind of becomes more of a corrupt business and a corrupt industry a little bit. So that's the thing I don't like. I mean, but I don't know. I don't own Hershey's, so I can't make the decision, unfortunately, but it will be up to Hershey's. Now, their balance sheet is not very good. 3.6 billion in debt with only 400 million in cash, and they've been good with the dividends, so that's nice. Shares outstanding is not really a problem. Last year, 28% return on, well, I mean, they did that because they barely have any cash. They only have 400 million in cash, so that's why their 1.8 billion looks like a lot. But so that is the situation here. Hershey's is their growth is going down, the costs are going up. Let's scroll down to expenses. Yeah, so here's the expenses, especially in 2022, 2021, it was getting really bad, right? And we go to trailing 12 months here in the last quarter, but I mean what is that? Q2 of 2024, it peaked. It was a lot, right? So it's I don't know. That's what happens. That's all I can say is that's what happens. The P ratio is the cheapest it's been pretty much in the last 5 years plus. It's pretty cheap. But again, I don't think did I ever buy this? No, I never bought this. And it's just, I mean, it pays a 3% dividend, which is nice, but the company's just in trouble. Their numbers are down, their costs are up. I mean, I don't think Hershey's would ever go out of style though. If they've been around since 1894, that's a pretty good track record of selling chocolate for over 100 years. But I mean, yeah, when you have big companies like Mondelez that come in and want to buy this, then what are you going to do if you're struggling and not making as much money? But I mean, for a consumer, it's not good. It's not really a good thing because it's just you don't want one company owning every single snacks brand out there. So that is my analysis for this current deal going on with Hershey's. But thank you for watching. I will see you in the next video.